Good morning, everyone, and thank you for joining us today. My name is Meghan Hannon. I'm a partner here at Boulay Financial Advisors, and we are thrilled to have you for what promises to be an enlightening session. We are honored to feature Michael Townsend as our guest speaker today. Mike is the managing director of legislative and regulatory affairs at Charles Schwab, and he serves as the firm's Washington-based political analyst. With over 30 years of Washington experience, 24 of those at Schwab, Mike analyzes legislative, regulatory, and political developments to determine how they affect individual investors, and then develop strategies to communicate those perspectives to policymakers, the media, employees, and clients. He's a featured speaker at dozens of industry events, and he also hosts Schwab's popular Washington Wise podcast, which explores the intersection between policy, politics, the markets, and the economy. Prior to joining Schwab in 2000, Mike served as an aide to two U.S. senators. He's a graduate of Bowdoin College in Maine and holds a master's in English literature from George Mason University. Today, Mike is going to share his unique perspective on Washington's political landscape. Believe it or not, there seems to be a lot to cover. We have the polarized environment of the upcoming election, key developments in Capitol Hill, tax reform debates, Fed policy, and the regulatory proposals that are going to affect each and every one of us. We're all going to benefit today from Mike's ability to cut through the noise and help us focus on what truly impacts the markets and ultimately your portfolio. So before I turn it over to Mike, I want to share some details on how this session is going to operate. First, we're going to have Mike present for about 35 minutes. Afterward, we'll save about 15 minutes for Q&A. I invite you to use the Q&A feature that you find at the bottom of your screen. So use that Q&A feature to submit your questions throughout today's presentation. When we get to the Q&A section, I can consolidate and relay those questions over to Mike. And then lastly, I do want to say this webinar is being recorded, and we will share a link of the recording after the presentation. So with all that said and out of the way, let's dive right in and give a warm welcome to Michael Townsend. Mike?
Thanks, Meghan, and hi, everybody. It's great to be with you. I'm actually speaking to you from New Orleans, Louisiana. I'm on the road this week, but normally I'm in Washington, D.C., and at Charles Schwab, we have a little office in downtown D.C. There are 5 of us, and it's our job to watch what's going on Capitol Hill, in the halls of Congress, at the White House, at the regulatory agencies, the SEC and the Fed, and really try to figure out what it all means for individual investors. And as Meghan said, my job is kind of to help all of you cut through all the noise and the nonsense in Washington and focus on what's really worth paying attention to. So what I'm going to do today is talk a little bit about kind of the lay of the land in Washington, some of the policy issues that we're following. I'll talk a little bit about the Fed. And then we've got this little election thing coming up in 4 weeks, and so I'll share some thoughts on that. So I'm going to go ahead and get going here. And I thought I'd start by just kind of offering some thoughts that I hear on the road. I do this all the time, particularly in election years. I'm traveling all over the country. I'm talking to investors about how they're feeling about things, and it's been really interesting on the road this year because you look at the S&P 500 year to date, up 20%, really strong, solid performance. And yet there's this kind of undercurrent of anxiety that I think a lot of investors feel. And I put here on this first slide some of the reasons for that. And we're going to try to tackle some of these over the course of our conversation today. But we have a dysfunctional Congress that I think people are really, really frustrated with. We're going to talk a little bit about that in just a minute. We also have this unprecedented distrust of institutions that I think is becoming a bigger and bigger issue. Supreme Court at its lowest approval rating ever. Congress at a robust 13% approval rating. One of the things I'm doing as I travel around the country is trying to find the 13% who approve of what Congress is doing. It's been pretty tricky so far. Lots of geopolitical things going on. U.S.-China tensions sort of always percolating beneath the surface. We have the 2 ongoing wars in Ukraine and the escalating situation in the Middle East with Israel now involving Lebanon and Iran. I think those both situations have sort of no clear resolution, no timetable. It's not even sure what a resolution looks like in those. And I think that creates some concerns about various aspects of oil and those kinds of things that could be become a concern. Globally, we also have central banks around the world trying to figure out what they're going to do and to combat inflation. Inflation is coming down in most places, obviously, including here in the United States, but central banks are moving at different paces in terms of their rate cutting and their strategies. And so that creates a little bit of uncertainty. And then here at home, obviously the election, and we'll talk in depth about what's going on in the election, but a historic late change in candidate, 2 assassination attempts, lots and lots of tension around the election. And I think that's a big source of anxiety. It's true around the world too. This is an odd year in terms of the confluence of timing. There are more than 60 major countries that have elections this year. We've already seen elections in places like France and the UK and Mexico and India and Taiwan, most recently Japan. There are more than 4 billion people who are affected by an election this year. So I think that also creates a little bit of uncertainty. So, with that kind of background, I think it's just an environment that concerns people even when the market is performing very, very well. And I think there's an important distinction there between how the market is perceiving events and sometimes how we're emotionally perceiving events. And I'll talk more about that in just a minute. I'm going to start on Capitol Hill, though. I think, as everybody knows, split Congress right now, 51-49 for the Democrats in the Senate, 220 to 211 for the Republicans in the House of Representatives. And as we've seen throughout this year, particularly in the House, Republicans have had a really hard time staying kind of all on the same page. And it's been really difficult for them to pass things through the House. And even when they do manage to do that, then of course it goes to the Democrat-controlled Senate and tends to fall apart there. And the 2 chambers just end up in very different positions on most everything. And that has created an environment where it is really, really difficult to get even the most basic things done. And I would argue that the most basic thing that Congress has to do every year is fund the government. And this comes up every fall because Congress has a deadline of September 30th to pass the budget for the coming fiscal year. The government's fiscal year starts on October 1. So every fall, we get to that September 30th deadline where Congress is supposed to pass the 12 appropriations bills that fund every government agency and every federal program. And basically, they almost never get it done. And this year, they didn't get it done again. In fact, Congress has passed exactly 0 of those 12 bills. And those are the bills that need to pass in order to avoid a government shutdown. Now, we don't often see a government shutdown, and that is in part because Congress employs a very common strategy of maybe what they do better than anything else, which is kicking the can down the road. And that's what they did at the end of last month. They basically passed a bill that said all federal funding just continues at the same level through December 20th. And then Congress left town, they went home, they're all campaigning for this last month of October. And then they'll have to come back after the election in what is known as a lame duck session of Congress. And that, remember, it's the old Congress, the Congress that's in place now, not the new Congress that gets elected in November. They don't take office until January. So you have this very weird dynamic post-election where you've got members of Congress who are retiring, members of Congress who just lost their election. They're the ones who are going to have to come back and negotiate some kind of funding mechanism to make sure that we don't have a shutdown right before Christmas. So I think that's going to be challenging. That extension of funding did include $230 roughly million for the Secret Service to upgrade their protective capabilities in the wake of the 2 assassination attempts. Strong bipartisan support for that, as you might imagine. And then the one other notable spending bill of the year, earlier this year, Congress did, after much going back and forth, pass a $95 billion foreign aid bill, $60 billion for Ukraine, $24 billion for Israel, $8 billion for Taiwan. Piece of that bill that actually made a lot of attention in my household, however, was the TikTok ban. That's the bill that had the TikTok ban. I have a 16-year-old in my house, and my 16-year-old doesn't pay a lot of attention to what I do for a living, but all of a sudden got really interested in what I do because of the TikTok ban. So he got that, Dad, they can do that? And you're like, yes, they can. That TikTok ban, by the way, of course, is in litigation now, and who knows whether that's actually gonna happen as scheduled in early 2025. It seems pretty tied up in the courts, at least right now. Though there's not much going on sort of right now in Washington, there is a huge issue looming that is getting already a lot of work is being done to lay the groundwork for what is shaping up in 2025 as the mother of all tax fights. And the reason for that is because all of the 2017 tax cuts, so we're talking lower income tax rates, higher standard deduction, the higher exemption for the estate tax, meaning that the amount of assets that can be inherited without triggering the estate tax, that is something that also is set to expire and would fall by about half in 2026 if Congress doesn't do anything about 2025. So all of those tax cuts, and remember that's the Trump, all the tax cuts that passed in the first Trump administration, 2017, they all expire at the end of 2025. And so that's the catalyst for what is going to be a big debate next year. But what you're seeing also, particularly on the presidential campaign trail, is lots of other tax ideas that the candidates are throwing out there in anticipation of that big debate next year where there's going to be a big tax bill. So you're seeing, former President Trump not only saying he wants to extend those tax cuts, but he's proposed this idea of ending the taxation of tip income. That is something that kind of has gotten a lot of momentum. Vice President Harris supports a slightly different version of that, but that has some momentum in Washington. Former President Trump has also talked about ending the tax on Social Security benefits, about ending the tax on overtime pay. Harris, for her part, has talked about a new tax credit for newborns, a bigger tax credit for small business startup expenses, a new tax credit for first-time home buyers. So there are all these different ideas that are sort of floating out there in the context of the campaign, but could then actually get some momentum next year in this tax debate. So definitely something to watch. Did want to mention two things particularly notable for investors. One, Harris recently proposed her plan for capital gains taxes. And what was notable about it is that she broke pretty significantly from where Joe Biden is on a tax issue, on the capital gains issue. So Biden has long said that cap gains for people above $1 million in income, once you get above that level, cap gains should be taxed as ordinary income. He would take the top rate to 39.6%. He would add the net investment income tax, which is currently a 3.8% surtax on investment income for wealthier filers. He'd bump that up to 5%. So you'd have 39.6 plus 5, a top cap gains rate of 44.6% under the Biden plan. Harris, however, came out and said she would cap the rate at 28% for wealthier filers, plus that 5% in net investment income tax for a top rate of 33%. So much lower than what Biden has been proposing, and a fairly significant difference between Biden and Harris, and in something that there aren't a lot of huge differences in their policies, but that's a notable one. The other one that I get asked about quite a bit is this notion of could unrealized gains be taxed? And I will tell you that among all the things that I'm worried about, this is a pretty low level worry for me that this is ever going to happen. The context of this is that Biden has long had a proposal that says it's known as the billionaires tax. It basically says it's a minimum tax on assets above $100 million. And Harris has endorsed that proposal, and that would include taxing unrealized gains at that level. However, I can tell you that in Washington, I just don't think there's even united Democrat support for taxing unrealized gains, let alone there's no Republican support for it. It's also incredibly hard operationally. You kind of imagine, what would the IRS form look like for, trying to calculate the value of an art collection or something like that. And it has some constitutional questions, whether it would stand up to legal scrutiny. So you'll hear a lot about unrealized gains, but I don't think it's really something to be worried about at all going forward. All this said, all this tax debate is going to be shaped by the election outcome, because until we have the election result and we know what the configuration is going to be in Washington, who controls the House, who controls the Senate, who's in the White House, you just don't know how this is going to play out. And that's kind of frustrating to not be able to know what direction this is going. But think about if if Republicans sweep, if Trump wins the White House and Republicans win the House and Senate, it's a very different debate on taxes than if you have a split Congress next year and you have to negotiate everything out. So come back and ask me after the election. I'll have a better sense of how some of this may play out on the tax side. I want to just briefly mention the Federal Reserve. I think, as everybody knows, the Fed last month cut rates by 50 basis points to 4.75 to 5% range. First cut since 2020, first movement of any type in 14 months. They had gone 8 straight meetings without any change in the rate. And, I'm not reading a whole ton into the fact that it was a 50 basis point hike, 50 basis point cut as opposed to a 25 basis point cut. I think, if you look at the data and the Fed looks at the data that came in over the summer, the Fed probably says that the Fed probably should have started cutting in July. And if they had done that, they probably would have cut by 25 in July and 25 in September. You sort of end up in the same place. You're down 50 from where it was. I don't know that there was anything more to that. Fed deliberations are always sort of mysterious, but looking ahead, the Fed is projecting 2 more rate cuts before the end of the year, 25 basis points at both the November and December meetings. Those are the last 2 meetings of the year. And then maybe 4 cuts next year. So definitely not an every meeting sort of approach, at least is how they're thinking right now. And probably heading towards a rate ultimately of around 3% or a little below that, but not until 2026. The Fed is kind of sending the signal that they're going to be very deliberate. The Fed is incredibly data dependent. There's lots of information that's going to come between now and the next meeting and the one after that that'll affect what direction they may go in terms of the pace. So we'll watch for the next meeting, November 6th and 7th, right after the election. One fun trivia note about the last meeting, there was one Fed governor who dissented on the 50 basis point cut. That was actually the first time a Fed governor had dissented on a monetary policy move since 2005. So pretty unusual there. With that, let's talk election. I try to start with this slide. I've used this for years over the course of election season. Kind of fun. You put up everybody's little logo. You do a big red X when they drop out of the race. And of course, it wasn't as fun this year because most of these candidates had dropped out long before the race even really got going. We didn't have the kind of really competitive primaries that we've seen in previous years. And it's a good reminder that some of these people even ran at all. So kind of fun that way. The one big red X I did not expect, of course, was the Joe Biden one. Historic change in the candidate. That just something we've never seen before. I think this little chart sort of gives you a sense of what happened here, and that is that Harris managed to kind of restore the enthusiasm for Democrats and close what was an enormous enthusiasm gap. So what you're looking at here is it basically says that after the bad debate in June that Biden had and before he dropped out, just 1/3 of Democrats were enthusiastic about Joe Biden being their candidate. After Harris came in, that jumped up to north of 80%. And I think what you're seeing is that that's what's normal, right? The presidential race is usually Democrats are very enthusiastic about their candidate, Republicans are very enthusiastic about their candidate. Harris essentially reset the race to where it ought to have been in a normal environment. Just a very, both parties, very happy with their nominee. I do think that she had quite a honeymoon for several weeks, incredible enthusiasm, a big fundraising explosion. But I think the race has settled to where we all know it is. And this is a chart of the current polling versus where we were pre-Biden dropping out. And these are the 7 states that are going to determine the next president. These are the battleground states. And what you're looking at is an aggregation of polling done by 538, used to be 538.com, now a subsidiary of ABC News. I think they do a really good job at weighting different polls based on methodology and responses and all that sort of thing, and gives you a good sort of overall snapshot of where the race is in these states. And you'll look at this list, it is incredible. I mean, it is tied, just tied. There's no other way to describe it. These 7 states are all within less than 2 points across many, many polls. So the average is less than 2 points apart, well within the margin of error of the polls themselves. I mean, you just couldn't be more tied. It's amazing to have polls done for weeks and weeks and weeks that average out to, 0.8 and 0.9 and 1.0 margin. I mean, these are incredibly close. We haven't seen anything like this. We've had close races in recent elections, but nothing that had, these 7 key battleground states just absolutely as even as they possibly could be. And I think it's going to continue that way. It's very hard to see what would change this all the way up to the end over the next 4 weeks. So looking at some of the key dates, important to remember that voting started on September 20th. I live in the state of Virginia. Virginia, along with Minnesota and South Dakota, are the first 3 states that started voting. We've had lots of early voting going on over the last couple of weeks in Virginia. Lots of other states coming online here in the coming days and weeks. So a lot of real ballots are sort of already happening, even as the campaign sort of feels like it's continuing to unfold. We had last week's vice presidential debate. I thought it was fine. Vice presidents, nobody really cares. Nobody votes on vice presidential candidates. Vice presidential debates historically have not mattered much. The candidates have one task, and it is to avoid doing something so horrific that it causes some sort of reaction across the race. I think both vice presidential candidates succeeded at that. No more presidential debates on the calendar, although I don't know. I think there's still the slightest chance that we could get another one, but it doesn't look like it right now. There are a couple of notable town halls coming up. Harris and Trump are both doing town halls on Univision, which is a Hispanic focus. Actually, Trump's was supposed to be tonight in Florida, but they postponed that due to the hurricane to next week. Harris is still on for hers on Thursday. And then we have a sprint to November 5th, and we'll see what other events happen. I do want to mention third-party candidates because, in a race this close, third-party candidates can still matter. And I know it's changed a lot since Robert F. Kennedy Jr., who was the independent candidate, who was first half of the year polling at 8, 9, 10, 11% nationally. I mean, substantive. He wasn't going to win any states, but he was definitely going to potentially influence some of those states. However, he's dropped out. He endorsed Trump. There are still minor party candidates. There's a libertarian candidate. There's a Green Party candidate. There are still some independent candidates. And in this tight of race, they could really, really matter. Now, I'll give you an example of why I say that. 2016, Michigan, Hillary Clinton versus Donald Trump. Trump won Michigan in 2016 by less than 11,000 votes. There were 275,000 votes cast in Michigan for people not named Clinton or Trump. So just imagine if a relatively small number of those voters had gone a different direction. So we're in a race that's possibly even tighter than that one. And those relatively small numbers that third-party candidates are getting could still be influential in some of these key states. So keep an eye on that. So 4 weeks to go from today. Normally we're talking about the undecided voter, right? And you think, historically, when you think about an undecided voter, right, you imagine ABC News is in Wisconsin at a diner talking to 9 voters about who they're going to vote for, right? That's not really what we have. What I think the candidates are really focused on, the campaigns are really focused on, are unenthusiastic voters, voters who don't vote every time, the voters who are just sick and tired of all this and just don't want to put up with it anymore. Getting them to go to the polls and support one or the other candidate, I think that's what the campaigns are really, really focused on, and they're going to be very, very decisive in terms of the outcome. All that said, the presidential race is really important, but the markets care a lot, and maybe more, about the battle for the control of Congress. Why? Because presidential candidates say all sorts of stuff, make all sorts of promises, but it's Congress that ultimately has to pass most of that into law. And so that is something that the markets really pay attention to, not the kind of race back and forth between candidates, but what's the end result? What are the things that could move the markets? And I'll give you an example. 2022, Congress passed the CHIPS Act, a big infusion of money into the semiconductor industry. There are companies building semiconductor plants all over the country right now. And I think that's what I mean when, there's sort of a direct line between Congress passed this money, it went to these types of companies, this kind of sector. That's what the market can sort of make those connections between a policy decision and something that could benefit a company from a market perspective. So that's why I think it's very much worth paying attention to the battles for the House and the Senate. So this map that you're looking at here, that is the map of which states have a Senate seat up for election. Remember, it's 51-49 for the Democrats right now. 23 Democrats are up for re-election and just 11 Republicans. So big advantage numerically for Republicans, who only need to flip 2 seats to get the majority. They have basically already flipped one, that is in West Virginia, where moderate Democrat turned independent Joe Manchin is the senator from West Virginia. He is not running for re-election. Jim Justice, who is the Republican governor of West Virginia, is the Senate nominee. He is going to cakewalk into that seat. That is a very easy win for the Republicans in a very red state. So boom, we're at 50-50 right there. Republicans only need to flip one more seat to get the majority. I'd keep my eye on Montana. Montana and Ohio are the last 2 red states that have a Democratic senator. And John Tester, who's a Democratic senator in Montana, he's been down in the polls. That's a really, really tough state. Ohio is going to be very, very competitive. And there are just other Democrats who are in tough races in places like Michigan, Arizona, Nevada, with Pennsylvania, maybe Wisconsin. So I just think there are enough opportunities for Republicans to get that additional seat or 2. I don't think they're going to have a huge majority, but I would say they're heavily favored to win the majority in the Senate. At the same time, I actually think Democrats have a decent chance of flipping the House of Representatives and taking over control of that chamber. Really, when you look at the House, they run every 2 years, 435 members of Congress. There are maybe 35 or 40 competitive races in the House. And when you look at those races, what I look at is, where is there a Democrat member of Congress representing a district that has voted for Donald Trump in the last election? Or a Republican member of Congress in a district that voted for Joe Biden in the last election? Those are sort of, flippable, vulnerable seats. And there are just more Republicans in those seats than there are Democrats in those kinds of seats. And I think that gives Democrats an advantage to flip some of those seats. They only need to flip 5 for the majority. So I don't think it's a slam dunk, but I think Democrats could win the House. And if that happens, first time in history, we have never had the House and Senate flip in opposite directions in the same election. I'm going to wrap up with a few charts that answer some fun questions that I get when I'm on the road. This one's just an interesting one. What you're looking at, the yellow circles represent election years in which at least one of the House, Senate, or White House has changed parties. And what I want you to notice is that from 1960 to 2000, we had 20 elections, and only 7 times did any one of the House, Senate, or White House change from one party to the other. However, since 2000, we've had 12 elections, and there's been a flip at least 10 times. So at least one has changed 10 of those 12 times, including 5 in a row. I think that's indicative of our divided country, but I also think it's indicative of the frustration voters have with electing people who just can't get stuff done, and they get mad and they try to switch and make some other combination. So would not be surprised. In fact, I all but guarantee that we'll see at least one flip in 2024. This one goes at one of the most common questions I get. What is the best configuration in Washington for the markets? This looks at the Dow Jones Industrial Average, goes back 120 years by what the configuration in Washington was. Best market performance is in the configuration we have right now. Democrat in the White House and a split Congress, except it's the rarest combination. So this is one of the things that comes up with election sort of market data all the time, small sample sizes. It is absolutely true that the best market performance has been in this particular configuration, but we have only had 8 of the last 120 years in this particular configuration. So I don't know that you can hold much to that. It's just such a small sample size of years. This one looks at how the market does in each of the 4 years of the presidential term. And what I want you to know in that red circle there, The S&P 500 returns an average of about 7.5%, 8% historically in election years. Not bad, pretty decent return. But this breaks that down into every election, presidential election since 1928. And what I want you to see is those 4 yellow circles, because there is only 4 years, presidential election years, that the market has gone down: 1932, 1940, 2000, and 2008. What was going on in those years? 1932, Great Depression. 1940, Europe is falling apart. World War II is around the corner. 2000, tech bubble burst. 2008, great financial crisis. The 4 years, presidential years, in which the market went down, it went down for reasons having absolutely nothing to do with the fact that it was a presidential election year. It's really important to keep that in mind. The market does not really care about the fact that there's an election or what the outcome is even. The market cares about what the market always cares about. And these 4 times in these yellow circles, these were big economic, geopolitical situations that really affected the markets, not the election that year. So important to keep that in mind. We also looked at things like, how does the market react to an election itself, right? So if you look at how did the S&P 500 do 1 day, 1 week, 1 month after the election, last 6 presidential elections, the S&P 500 has been up 1 day, 1 week, and 1 month after the election 3 times. It's been down 1 day, 1 week, and 1 month after the election 3 times. Again, not much of a pattern that you can there. We did a whole thing where we looked at sectors and how sectors perform around elections. Absolutely no pattern whatsoever. There has been one that gets reported a lot. Has there been a recession in the couple of years prior to a presidential election? If so, the incumbent usually pays the price for that. However, we don't have that situation here. And one that I do keep my eye on, market performance in the last 3 months before an election, August, September, October, tends to be a good predictor of the outcome. If it's up, that tends to be good for the incumbent in the White House and his or her party. If it's down, it tends to be not so good for the incumbent party. That's one that does have at least a decent track record. So I'm going to conclude with these last 2 slides. This is a chart that looks at the growth of a dollar since the early 1960s across every presidential administration. And what I want you to do is, there are ups and downs to the market, right? We all know those things happen. And, the 2000 tech bubble time, the 2008 great financial crisis, but trend line is pretty good in that way. And this is the one that I hope really brings it home. If you had invested $10,000 in 1961 and only kept it in the market when a Republican was in the White House, you'd have about $100,000 today. If you only kept it in the market when a Democrat was in the White House, you'd have about $500,000 today. But of course, if you kept it in the market the whole time, regardless of who was in the White House, you'd have $5.1 million today. So what I want to leave you with is this. It's going to be an emotional time. This is an emotional time for everybody. It's an emotional election. It's probably going to get more emotional as we go forward. It is, I think, whatever happens, it's probably going to be very emotional right afterwards. Either you're happy or you're very, very sad or something. But those emotions are a terrible mix with your investing decisions. We just don't want to invest emotionally. And as I've tried to show you, the markets don't really care about the election outcome. And the markets will adapt to whatever happens in the coming year or beyond based on policy developments. What is going to happen with those taxes? What's going to happen with the debt ceiling? That's another fight that has to happen in 2025. Those are the things that the market cares about. The horse race doesn't really care much about that at all. So try to keep those emotions out of your decisions over the next couple of months. And if you are feeling emotional about the election, obviously reach out to Boulay and your financial advisor. Have those conversations. I think they're great at talking you off the ledge. So with that, I will show my little tiny microscopic disclosures here. And then we're going to bring Meghan back on for some questions. And thank you all very much for spending some time with me.
Fantastic. Thank you, Mike. Really appreciate your insight. And I think a great reminder that, emotions and investing are not a great mix. Um, Great analysis. Thanks for taking us through those slides. You've certainly given us a lot to think about. So maybe let's transition and we'll go right into some Q&A. To those of you who have already submitted some questions so far, thank you. Let's keep them coming. And just as a reminder, you can submit your question through the Q&A box found at the bottom of your screen. This is different from the chat box. So find the Q&A box and keep sending in those questions, and I'll do my best to consolidate and relay them over to Mike. And so while we kind of have those rolling in, maybe let's start with a topic that we all can't seem to stop talking about, which is AI, artificial intelligence. So AI-related companies, they've attracted a lot of attention in the markets. Mike, how is AI playing out in Washington, and do you think that there's going to be some regulation around it?
Yeah, it's an interesting question. It's actually, so far at least, one of the more bipartisan issues that's going on in Washington. And what's been happening over the course of the last year is there's been a really concerted effort by both parties to kind of take a step back and educate themselves. I mean, the reality is members of Congress don't understand much about this whole AI world. And so over the course of the last year, they've been doing these kind of bipartisan education sessions where they bring in tech CEOs and advocates from different perspectives and academic experts and all sorts of different people to kind of lay out some of the issues that surround AI. I think there is bipartisan consensus that we need to put some guardrails around AI. I think nobody wants to stifle innovation or anything like that. But nobody wants to see like AI like erase humanity. So there's probably some middle ground there where they could find something to get done. The European Union has put some regulations in place that kind of put those guardrails in place. Maybe that's a sort of model. I'm watching this as an issue for 2025 because I do think there is some bipartisan support, and like I said, there aren't a lot of issues in which there's real kind of bipartisan working together on things. But this is one that doesn't really have clear sort of party divisions. So I'm optimistic that they'll get something done that's kind of reasonable. The details are always hard on stuff like this. So that's going to be the hurdle, is to get it right, which Congress sometimes struggles to do. So we'll see. But I'm watching this one in 25, definitely.
Very good. Thank you. We do have questions coming in about the national debt. So can you share a little bit, how worried are you about the enormous federal deficit and national debt? What can Congress do to try to get things under control?
Yeah, this is a really common question I get, because you just look at the numbers, right? That the national deficit, the federal deficit is about $1.8 trillion right now. The national debt, which is the accumulation of deficits over time, sits at north of $35 trillion, which is just an absolutely crazy number. But, of course, we're in campaign mode, right, in Washington. So there have been these analyses, right, that if everything that former President Trump has said on the campaign trail was actually implemented, would increase the debt by like 15 trillion. If everything that Harris has said on the campaign trail was implemented, it would increase the debt by 8 or 9 trillion. So, there's a little bit of candidates kind of in the mode of throwing ideas out to everybody and trying to get their different constituencies to support them. All those things aren't obviously going to happen no matter who wins, so it won't be that dramatic of an effect. But the thing is that Congress understands this and just can't get much to get it under control. And this is going to come back in 2025 because the debt ceiling, which is the cap on the amount of debt that the United States can accumulate, has been suspended since mid-2023. That was the last time we had a debt ceiling debate. And it comes back on January 1st, what that means is we're immediately at that cap, and Congress is going to have to raise that cap to allow the country to accumulate more debt. Treasury can sort of push paper around for a few months to make sure that we don't default. They'll do that, but it's probably spring, summer of 2025 when this debate will happen. And it's always a tough debate. The last time we got within days of defaulting, and the market does not like it when we get to the edge of defaulting. But we've never defaulted at the same time. So Congress usually does lift it. But the point is that doing that is about raising the amount of debt the US can accumulate. It's not at all about lowering that deficit or debt. And when you hear all these arguments on Capitol Hill about, we got to hold the line on spending and that sort of thing, well, in a $1.8 trillion deficit, arguing for 2 days over cutting 10 billion from the IRS budget is nothing. It's not moving the needle at all. So Congress is going to have to get serious about this at some point. You're going to have to cut some spending, but you're going to have to raise taxes on somebody at some point in order to make the numbers start to come back in the right direction. In a campaign mode, I'm not optimistic there's going to be much discussion of that. We'll probably pick up that discussion in 2025.
Yeah, lots to talk about in 25 on that topic. Maybe let's switch gears. And I know one of the big concerns for clients is the future of Social Security. Do you think Congress will ever get around to shoring up that program?
Yeah, I guess they're going to have to at some point. With Social Security, the trust fund, the trustees of the trust fund that runs Social Security, they put out a report every spring on sort of the health of the program. They did so back in May. And what it said was that 2034 is the year where, if nothing changes, that's the year when Social Security will no longer be able to pay out full benefits. So everybody knows that date is coming. That date has been coming for decades. Everyone's known it. But that's still a few years away, obviously. So that makes it maybe not the highest priority for things. The problem with Social Security from a political perspective is that all the choices of what to do about it are bad politically, right? You can cut benefits, you can raise the amount of income that's taxed, you can raise the tax rate, you can raise the retirement age, et cetera. These options have always been on the table, but they're really tough votes to take for members who are trying to get reelected and that sort of thing. So everyone knows those choices are coming. When they are going to actually get to it. Next year is a big tax year, as I've mentioned. 2026 is a midterm election year. Maybe 2027, before the presidential race of 28 really gets underway. Maybe that's a year where you could see some actual serious negotiation on this. I'm not optimistic much will happen before then, but that's kind of where I have my eye right now in terms of timing is 2027. And at the end of the day, you can write all sorts of white papers about what to do about it, but if you just raise the amount of income that is taxed, subject to the payroll tax, you don't even have to raise it that much from where it is now. You actually extend the life of the program by years and years and years. So nobody wants to hear that. That's, raising taxes on anybody is very, very hard to do on Capitol Hill. But I would not be surprised if that's kind of where things ended up in a few years. We'll see. I do think Congress will eventually do what it needs to do to make sure that program is sustainable through the next couple of decades after that 2034 deadline.
Good. Thank you. We have some questions coming in, all related to climate change. Mm-hmm. So the thought is climate change is a huge and growing menace to our way of life and economy. Why does it seem that both parties have danced around this issue? And in that same light, it being maybe timely and relevant given the events going on in Florida of back-to-back hurricanes and the cost of these natural disasters. And can you share your thoughts around climate change and the economy?
Yeah, and maybe I'll take that in sort of reverse order and mention the cost issue first, because there's a big debate going on, in fact, about whether the president has sort of mentioned calling Congress back into session, which is pretty unusual, sometime this month, in order to deal with these back-to-back disasters and making sure that there's enough aid. The sense on Capitol Hill is that there's enough money in the emergency coffers to get through these disasters. But when they come back after the election, they're going to have to deal with putting more money into that pot, essentially, for FEMA and other agencies to deal with disasters, because they're going to spend that down here with these back-to-back hurricanes. But the larger question is such a hard one on Capitol Hill. I mean, I've talked. You've thrown out some of the absolute most difficult issues. Debt and deficit, I think, is one. Social Security, I think, is one, and climate change is one, because it's been really, really difficult for Congress. Even the two parties alone, let alone together, to kind of come together on what are the solutions to that, to what needs to happen. And there are just all sorts of ideas out there, and not a lot of them have sort of coalesced into broad support. And so you feel like Congress is kind of spinning its wheels on these issues. And you look at some of the things that the Biden administration has done around green energy and that sort of thing. I mean, trying to head us in different directions on some of these issues. But even those are very, very slow to sort of really make an impact. And so I think this is one of the thorniest questions that there is for Congress to figure out. What are the steps that Congress can take to pass laws that meaningfully address this? It's just not an obvious answer. And I think that's what Congress has really struggled with in this area.
Great, thank you. We've got some questions addressing geopolitical tensions, which there's plenty to talk about with Ukraine and the Middle East. What's on your radar? What are your major concerns over the next 12 to 18 months?
Yeah, I mean, I think obviously the Middle East situation is, number one right now, because that feels like it's sort of teetering on getting very much out of control. And because if it gets more out of control, then you potentially have an oil shock, and that starts to reverberate across our economy and other economies around the world. And I think that's a concern about sort of where that conflict goes. I think the other one that I definitely keep my eye on is U.S.-China relations, which are have so many layers of different tensions and mutual understanding on some things and tensions and on other things. And I get asked a lot about Taiwan in particular. Taiwan is not one that we are super concerned about. China, making a major military incursion into Taiwan. I think we're going to see China continue to do what it has been doing in terms of military exercises in the Taiwan Strait and flyovers and sort of saber rattling, but not actually using the saber, so to speak. So that's one that I keep my eye on, but am not sort of immediately concerned about. And then the Ukraine, obviously the Ukraine situation continues to unfold. And as I said in my presentation, I don't know what even the solution is there. I mean, what is resolution of that even look like? But it seems unsustainable that it keeps going. So I think the hotspots right now getting sort of worse is a big concern. And there's always the sort of chance that that's something we aren't even thinking about right now kind of blows up into a big deal. That seems to be how geopolitical issues work these days.
Right, thank you. So given your 30 years of experience in Washington and your ability to we keep saying cut through the noise, what advice do you have for investors to help them really separate kind of the clickbait political theater from real legislative and regulatory actions that actually have an impact on the markets?
Yeah, I think the big thing is to remember that all of the stuff that really matters to the market takes time, a lot of time. So there's very little that happens in Washington that quickly affects the market, right? I'm talking about these issues that we know are coming around the debt ceiling. The market gets a little rattled around uncertainty around the debt ceiling. Taxes, that's going to affect the markets. There's a bunch of regulations that have been proposed to, kind of the SEC is always sort of nibbling around the edges of how trading works and that sort of thing. But these are super long processes that usually you have tons of notice on, and you can sort of see how they unfold. So I think that's the difference, particularly in a campaign season where it feels like everything is incredibly urgent and everything changes every day. The candidates are saying this, and then tomorrow they're saying something completely a whole nother issue. And you notice that the markets just don't react to that. And I think it's important for us not to react to it either, because the markets markets understand that the policy decisions that could ultimately affect things are months and months and months of lead time in order to get them through the process on Capitol Hill and actually turn into a law that starts mattering. And so I think that's the biggest piece of advice is just, try to ignore the minutia of the day-to-day campaign. And these bigger issues are gonna be able to shake out over time, where you'll have plenty of time to sort of react to it. There's very little that Washington does that affects the markets on a sort of day-to-day basis.
Very good. Let's see. So we so in this highly polarized political environment, we talked a little bit about AI, but where else do you see the greatest likelihood of bipartisan cooperation or agreement when it comes to economic issues, and to what impact?
Well, one that I also have my eye on is cryptocurrency, because cryptocurrency is another place where there actually is some pretty strong bipartisan momentum towards, again, kind of putting regulatory framework around it. Crypto just doesn't have the investor protections, the sort of regulatory structure that we're all aware the markets has. And I think a lot of people on both sides of the aisle would like to make that happen so that for people who are interested in it, there's some more, there's less fraud and scams and all that sort of thing. And so that's one that I'm watching, because actually the House has passed a bill that would kind of create that regulatory structure. It would kind of divide regulatory responsibilities between the SEC and the CFTC, the Commodity Futures Trading Commission, depending on the type of cryptocurrency and stuff like that. I think that would give people more confidence that this is something that is here to stay and has some protection around it. And again, both sides of the aisle want to do that. And then obviously, the big one next year is taxes. And with the likelihood that we're gonna have to have a divided Congress or have divided government in some way, there's going to have to be compromise, and that's going to be hard. I mean, these issues are really, really difficult, but I do think Congress knows that they have a deadline of the end of next year. I don't think anyone really wants all of those tax cuts to expire. There's a lot of arguing about which ones should expire, or that sort of thing. But I don't think the end game of having them all just expire is really something that anybody wants on either side of the aisle. So I think they are going to find a compromise. I think it's going to take a while, probably most of 2025. But I think they're going to try to find a compromise on tax issues that sort of gets at a reasonable exchange, maybe raising some rates for the wealthiest filers, but keeping things in place for lower income folks, and trying to figure out the details of that is one I'm going to be very, very closely watching.
Very good. Thank you. Maybe one last question before we wrap up. And we talked a little bit about the impact of, we talked about how Congress recently passed a short-term extension to keep the government funded through December 20th. With a lame duck administration, what other concerns, or what's on your radar of, I guess, concerns of having a lame duck administration going through the end of the year?
Yeah, I mean, it's very hard to predict, because if you end up with so a divided Congress coming in or something like that in 2025, or a change in the administration, then there's actually very little incentive to get stuff done in that lame duck period. There's more incentive to kind of push it into the new Congress, because the parties will sort of be weighing what's best for us. So we've got, our president is coming in, this one is going out, so we're going to wait, make those decisions in January. So what you often see is, things kind of kick down the road and into the first part of 2025. We'll see if that happens, but obviously, I don't think there's going to be a government shutdown right before the holidays, but that's certainly a possibility. But I think a lot of the kind of bigger decisions will not be made in that lame duck period, just because everyone's going to sort of be waiting for the new year and whatever the changes are to come into place. So we'll see if that plays out, but that's kind of my thinking right now.
Very good. Thank you, Mike. Thanks for taking all our questions.
Sure.
As we wrap up today's presentation, I want to say thank you to all of you for joining us. I hope you found Mike's insights as valuable and thought-provoking as I have. I think Mike made it quite clear that change is inevitable and the political and economic landscape is bound to be unpredictable, to say the least, as we move forward. I can tell you that it's much easier to feel confident and navigate through the noise and the uncertainty when you have a clear, integrated financial plan in place. And that's a plan that incorporates all of the essential areas of your financial life. So we're talking about your investment strategy, certainly your tax planning strategy, your estate planning. We want all of those elements to be cohesive and work in unison. A trusted advisor is an excellent resource. We can help you strategize and help you stay ahead of the changes, the tax policy changes or regulations, to make sure that you remain on track to meet your goals, regardless of who's in office or what's going on in Washington. So for our clients on the call today, I can see there's quite a few of you on the line. So we're so grateful for the trust that you place in us. Thank you for dialing in today. If you're not currently a Boulay client, but found something in today's presentation that resonates with you and your financial outlook, we'd love the opportunity to connect with you. The best way to reach us is via email, or you can visit our website, both of which you see on the screen here. Finally, I want to say a big thanks to Mike Townsend for sharing his time and his expertise with us today. We really appreciate his ability to just bring clarity to these important topics. So thank you again for everyone attending today, and we will be sharing a recording of this webinar with you all soon. Thank you so much and have a great day.